Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everyone. Welcome back to the show. Stop doing what you hate, how to win the retirement game. I'm your host, Harold Green of Brightree Wealth Management. And it is time really to stop doing what you hate. This is episode 9 of our financial advice, episode 9 of our series, Financial Advice versus Financial Propaganda. And so far in this series, we've talked about how narratives are created, how incentives distort advice, how media amplifies emotion, and how even aggressive investors fail when structure disappears. And today we're going to talk about something far more subtle and far more dangerous. And when I was putting this thing together here, one of the things I realized was this show is more for me and the type of do-it-yourselfer type of people that are out there than for clients who have someone that's, that they trust, that's managing for them. And this thing can get very, very dangerous, and it can make you a lot of money, but it can also lose you a lot of money too. And so today I want to talk about identity. And most investors don't lose money because they lack information. They lose money because they stop treating investing as a process and start treating it as a reflection of who they are. Like, I'm an investment advisor, I'm an investment manager. And the trades that I make, the themes that I pick, it becomes like all encompassing, like who I am. And one of the things I want to share with you right now is that they're still beating the drum about an AI bubble. And to me, it can get frustrating because I've been doing this for a very long time now. And I've seen what bubbles look like. I've seen what these things are. And it makes me upset. And I start to get defensive because I think people are being disingenuous. They're being dishonest. And so I've started doing a lot of deep dives into AI and how I believe, or how not I believe, but how it's going to help society as a whole. And there's going to be two types of people out there who, quite frankly, it's going to be those who they get on board early, they adopt early, and they begin to integrate this thing into their lives, and they become super productive. Then you're going to have those who say, I don't believe in it, it's scary, and they're not going to touch it, and they're going to get left out, and they're going to be the ones kind of late to the game. It's like, remember when the iPhone came out and, everybody's like, who needs an iPhone, right? Who wants a smartphone? Who needs a handheld device that, instead of a BlackBerry, they used to call it a Crackberry because it was so addicting. I mean, these things were so noisy. And so anytime I saw anybody with one, I was just like, these people are stupid. Like, what are they doing? They're always on their phone. Like, it's noisy, it's irritating. But it was the beginning of where we are today. And so one of the things I have to be careful of is to not let these themes become who I am. It's like, okay, you talk to me, that's all I can talk about is AI. That's all I can talk about is AI stocks. That's all you hear from me. And it's like, no, if you ever hear that from me, that's like, okay, that's a dangerous sign there. Again, most investors don't lose money because they lack information. They lose money because they stop treating investing as a process. In every trade I make, it's a process, whether it's in an AI theme, it's in a industrial theme, it's an energy theme. It's all part of a process, an investment process where we do a deep dive into an area, and then we go from there. Every investor crosses an invisible line. At first, ideas are provisional, positions are flexible, exposure is adjustable. But at some point, a position becomes more than a position. It becomes like, oh my God, you fall in love with this position. And and I'll share more on it in a second, it becomes proof of an intelligence, like evidence of foresight, like validation of a worldview, confirmation of being early, justification for past decisions. Like, I know I was right. This is great. I'm right. Look at this. It's exciting. When that happens, investing stops being about capital allocation. It becomes about self-confirmation. Like, who am I? If this thing pops off, it goes big. It makes me look good. I feel good. And that's what we have to be careful about. Markets are uncertain. Outcomes are noisy. Luck is uncomfortable to acknowledge. And sometimes you just get lucky. For me, I don't believe in luck. I believe in skill. I believe in preparation. I believe in diligence and those things, and I believe in action. And those things put together in the right sequence generates the right outcome. Identity fills the gap. Identity provides coherence, certainty, emotional stability, a narrative you can stand inside. Instead of saying, I don't know how this will play out, identity lets you say, I know who I am, and therefore I know how this ends. Like, really? That feels powerful. It's also dangerous. You can hear identity forming in language. Investors stop saying, I own this asset. They start saying, I'm a tech investor. I'm a crypto person. I'm a long term bull. I don't believe in bonds. This is the future. And sometimes this mindset can be correct. Sometimes, as an aggressive investor, you have to have this mindset, but it has to be formed around a process and not just like a Reddit theme. Once language shifts from ownership to identity, objectivity goes away. Positions stop being evaluated, they start being defended. And sometimes when you're defending something without a purpose or a process, it becomes problematic. Like standing up for somebody and because you like them, because they did you a favor, or staying at a job because they're mistreating you, but your loyalty is misplaced. From the inside, this feels like discipline. Like, yeah, okay, I'm going to deal with this. I'm a man up. It feels like staying the course, ignoring the noise, having conviction, thinking long term. But discipline without flexibility is not discipline, it's rigidity. And rigidity is what markets exploit. I'm telling you, this works across every single theme. People pounding the table, gold, 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 pounding the table, crypto, 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 pounding the table, energy, 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 pounding the table, bonds, bonds, bonds. And a lot of times you got to move in and out of these spaces. You got to move in and out. You got to juke here, juke there. Avoid this one, avoid that one, juke, move, stick and move. Like boxing, you got to be flexible because otherwise you can get knocked out. And when you're investing money, getting a financial knockout is hard to overcome. Conviction is belief in an outcome. Identity is belief in yourself. When those two merge, risk management weakens. And I have to be very careful about that. Like, why am I so hard headed about this? People ask me, like, why do you believe in this so much? Like, well, I see the numbers, I see the trends, I see the opportunity. And for me, this is all a process. Like, okay, so if we're going to talk about AI, what are the opportunities there? And who's taking advantage of the opportunities already? And who's going to be first to make that show up in their corporate earnings and in the bottom line? That's where we go. We go find that stuff out. We research and we find that out. It's not just me beating myself, my chest saying, I know this is going to work. Why? You always have to start with why. And sometimes trimming feels like betrayal. Okay. You're in this position and you got to trim it. Like, you got to trim it and you don't want to do it. And you're like, oh man, like, hedging feels like doubt. Exiting feels like admitting failure. And one of the great things about our process is we can get into a position and it can go totally sideways. And we have to know when to cut the plug. We did all the research, we did all the legwork, and then we get in this thing and it's like, man, if you guys did all that, shouldn't this thing be working? And this is where we say, I don't care what you say. I'm only going to lose this much money on this trade. I don't care. It may pop off a month later and be up 1,000%, but I don't know that. And right now we set our limits. Okay. Can we come back and get in later if it keeps falling? Yes, we can. We can go in and set another options price. And that's what I forgot to tell you in the last show. How you get 150% return is by adding options to the portfolio, but you have to have the right risk tolerance. And sometimes, going back to the previous point, exiting feels like admitting failure. At that point, the investor is no longer managing a portfolio. They're protecting a self image. That's dangerous. And this episode is not about eliminating conviction because I got to have it. Conviction is necessary to the core, but conviction without self awareness becomes fragility. Conviction without a process becomes stupidity. I'm going to say that again. Conviction without a process becomes stupidity. And you don't want to be making stupid financial decisions. And I want to talk about how Rapid Retire builds investor identity without weakening conviction. I strongly believe in the Rapid Retire financial planning process. They're talking about a large portion of the country are not invested in the stock market. They don't have money to put in the market. So you'll hear people say, so what? The stock market is going up. There's a lot of people who don't have stocks and they're suffering. Okay. Two things can be true at once. The stock market is going up for a lot of people, and a lot of people are not invested in the stock market. Why not? Why are they not investing not only in the market, but some people aren't even buying houses. Some people aren't invested in anything. And it goes back to like assigning blame. Whose fault is it that these people don't know how to invest in the stock market or buy life insurance or whatever it is? And I was talking to a very smart man, a very smart man. He's also an investment advisor. He's a financial advisor. He was going to school to become a doctor and decided that that's not what he wanted to do. And we started talking about some psychological things. And I said, why is it that only 3% of the people in the United States can retire with enough to live on? And the other 97%, 3% have enough, but the 97% they don't. I said, what is it about people? And he boiled it down to intelligence or intellect. And then it went from intellect to ability. Okay. So it's kind of tough because some people, he was saying that some people aren't just they're just not that smart. That's true. Some people are not. But just because you're not smart, I guess, I don't know, this is hard because the Bible talks about giving information to people and how fools treat information. Some people are just foolish is what it boils down to. Like, you got to save for retirement, but you're not. You're wasting it. That's a very foolish position. So when you make the argument that so many people are not investing in the stock market, so what, it goes up, what about these people? Well, what if these people are foolish? What if they're making a conscientious decision to like screw up their own lives? They know they're doing it. Even if you tell them to stop, they keep doing it. So what do you do with that one? You do nothing. Okay. You pray for folks, you share with them what you can, and you move on and you take care of yourself. You make sure you got yours and yours is good. But going back to this thing, most investors don't conscientiously choose an identity. They absorb one. It forms through market cycles, wins and losses, narratives that work once, and then pain that they want to avoid repeating. And then communities they spend time in. Ooh, this is a big one. Okay. Community that they spend time in. You heard the saying, birds of a feather flock together. Okay. You spend time with wise people, you become wise. You spend time with fools, you become fools. You spend time with people with good morals and habits. You develop good morals and habits. Okay. Those kinds of things. Over time, identity, what happens is it hardens and you become like, how can I say this? Like some of the seniors are like, I grew up during this time and that time, and we never bought this, we never bought that. We just saved money, and this is all we know. And they fail to learn anything else. Like the world is developing around them, but they're still living in the same house that was built like 100 years ago. Like, and they don't fix anything because it's to them, it's, like you don't touch it. An investor stops saying I'm allocating capital. They start saying this is how I invest. Rapid Retire does not try to eliminate confidence at all. It doesn't eliminate my confidence. As a matter of fact, it does not tell investors to stop believing, stop taking risks, or stop having views. What it does is it forces confidence to earn its place, right? Why do you believe what you believe? Why are you so hardcore about this? Instead, confidence coming from narratives or past wins. Confidence is anchored to structure, rules, time horizons, risk tolerance, liquidity, and repeatable decision making. Like we made 150% this year in several positions. We made 2,000% in several positions or whatever, 1,500%. How can we repeat that? And we also lost like 40, 50% in some positions. The sizing was everything. Okay. Now, this is going to shift identity from believer to operator. Like you go from believing something to knowing something. I don't believe my wife loves me. I know she loves me. I don't believe I'm good at what I do. I know I'm good at what I do. I don't believe my car is going to start. I know my car is going to start. You go from believing to knowing. And the thing about faith is you go from having faith and believing to acting. So if you never act on what you believe, do you really believe it anyway? I know I said a lot there. Now, instead of I believe this will happen, the investor becomes operate within a framework that works across outcomes. One of the things I say all the time, and I have it on my confession sheet right here. I'm going to take out my little positive confession sheet. And it comes from the Bible and it talks about hard times. And one of the things I say is, I'm like a tree planted by the water. I will not fear or be anxious when heat or drought comes. I will constantly yield fruit. Like I will always get results. I don't care what market we're in, I'm always going to get some results. Some outcomes are greater, some outcomes are not greater. And I was watching this thing about this guy who plays for the San Francisco 49ers, Christian McCaffrey. And he says, I always believe there will be lanes for me to run in. I always believe lanes will appear. I believe the same way in the market. I always believe opportunity will show itself up. Opportunity will show up. Like you're digging, you're digging, you're digging. Boom, there's the hole. Get in it, blast through it, make the money on the trade, get out. That shift alone reduces fragility. Decisions stop feeling personal. You just do. Losses stop feeling like incompetence. Like I don't feel bad when I see a position go down. Now, if I got to get out and take a loss on it, I'm not losing all the money. I'm stopping the bleeding and rotating it to something else that another opportunity appears. Opportunities are always showing up. Adjustments stop feeling like weakness. Okay. Actions become executions of plans, not statements about intelligence. The most important identity shift Rapid Retire creates is this: I win because I'm structured, not I win because I'm right. Markets punish people who need to be right. It's brutal. They reward people who stay liquid, adaptable, and solvent. Structure does not weaken aggression, it protects it. Like, I got money to be bold right here. I got cash to be bold right here. Aggression without structure is gambling. This is true. Aggression without structure is gambling. Aggression with structure is asymmetric. Okay. Now, here's some signals that you want to watch, right? Risk signals are meant to trigger review and adjustments. And you got to have these in place. But once identity attaches, signals become threats. Like, well, what is this? It's threatening my position here. Like, instead of something has changed, the investor hears you're being challenged. Charts are reinterpreted, data is rationalized, opposing views are dismissed, timelines are extended. They're talking about the AI bubble, and that's an opposing view. I don't think we're in a bubble. And my question is why are they saying that? Are they trying to drive a narrative? Is it an opposing view, or is it misinformation or a narrative? If it's misinformation or a narrative, that crap gets dismissed all day. You diss it all day because you know where it's coming from. But if there's rationale behind it and there's numbers behind it and not just someone saying stuff, then yeah, you got to look at that. Smart investors, they stay too long, not because they don't understand risk, but because exiting feels like self-contradiction. Risk will punish you slowly and then suddenly. Like it's like drip, 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 bam, the floodgates open and then you're done. Now, while investors wait, volatility erodes capital, opportunity cost accumulates, and optionality disappears. Like you lose your ability to see the opportunity when it shows up. Rapid retire for me, it interrupts this by replacing ego-based decisions with rule-based execution. When a rule is triggered, action is mechanical. You don't even have to think about it, right? There's no real emotion to it. It's just, we call it rotating. Okay. We just rotate. No debate, no identity defense. We just rotate. And that preserves confidence while removing like fragility, right? Now, one of the things I want to talk about is mixed exits, late entries, and the cost of defending a thesis or theory or a thing. Okay. Identity, it distorts timing. Exits, like they feel premature, interests feel urgent. I got to do it now. Patience feel virtuous, and missed exits happen incrementally. I'll wait a little longer before I get out of this trade. I'll hang on. Each delay deepens drawdowns and it reduces your flexibility. Identity, it also accelerates late entries. Pullbacks, they feel like gifts. Rallies feel like validation. Signals stop triggering action and start triggering explanations. And this is the investor slowly transformed from an allocator to a defender. In markets, they punish defense relentlessly. Like you're trying to hold on and defend what you're doing, and it just won't stop. I went through that in 2021 and 2022. I knew I was right, but man, boy, did we get punished really hard. And I ended up losing clients over that because they got impatient. I mean, they knew I was right, but they couldn't sleep at night. So for them, it's like it was too much. People value sleep more than future success. In some cases, right? They avoid risk because they want to sleep at night. They don't adjust with the risk and understand that, wait a minute, I'm never going to need all of this money. I only need like maybe 100 and 200,000 over the next 5 years. I got millions of dollars. They don't know. It doesn't mean you want to lose it all. Okay. But that wasn't the point. Some people just, they begin to feel uncomfortable because you're sitting there and you get punished. And it's like, aren't you going to do something? Aren't you going to do something? And as soon as you do something, you get punished the other way. Okay. The damage is often permanent, not just to capital, but to time. And building an investor identity that survives reality is what you need to do. Okay. Elite investors don't eliminate identity. They redefine what it is. They identify as operators. Okay. Smooth operator. They build identity around process, not positions. That's why we created the Rapid Retire Financial Planning process. Okay. Not the Rapid Retire Financial Planning positions. It's a process from how I believe to how I operate. Process-based identity is uncomfortable, but it's doable. It lasts. I read a book called Built to Last. And when you build a financial system, you need to build something that it survives, it transcends everything. It's flexible. It can change, it can bend, it can ebb, it can flow. It's not the same old thing. Sometimes buy and hold is good. Sometimes it's not. Sometimes having a lot of life insurance is good. Sometimes it's not. Sometimes annuities are good. Sometimes they're not. It's how it's all built in and structured. And the strongest investor identity is not certainty. It's capacity to adjust, capacity to exit, capacity to re-enter, capacity to stay solvent. Beliefs change. Narratives breaks. Okay. Narratives, they always break. And a process survives all of it. So you gotta have a process. And if you don't, you gotta look us up. Look me up on the internet. Go to www.brightfg.com. Request an appointment to talk to me and see where you are and to figure out, okay, here's the thing I'm going to say. First of all, you have to have the emotional IQ to handle process. Okay. I won't say smart enough. I would say the emotional IQ to handle a process, because your emotions are going to be all over the place. And the clients who keep their emotions in check the best, they are the ones that are the most successful. They're the happiest because they keep their emotions in check. The ones who can't keep their emotions in check, they're the ones that are miserable 50% of the time and happy 50% of the time. You gotta be on an even keel. And if you follow the process and do what you're supposed to do, you're gonna be just fine. And how I know somebody's not following the process is because I'll get questions about stuff that I shouldn't be getting questions about. It tells me right there that they didn't do the last thing that they were supposed to do. Like, did you update your e-money? Did you go look at this? Did you look at that statement? No, I didn't look at that. I just feel this way. Why do you feel that way? Well, because XYZ. Well, okay, let's get back into the process. Just like my golf swing. If I start swinging over the top again, my coach already knows that I haven't been training a certain thing that I need to do to train in order to keep from coming over the top of my golf ball. It's what it is. Okay. But you got to have a process. And so thank you very much for joining me in episode 9 of Financial Advice versus Financial Propaganda here on the Stop Doing What You Hate, How to Win the Retirement Game show. I want you to stay flexible. I want you to get structured so that you can get in the game and keep winning or start winning. If you ain't winning yet, I mean, we need to get you to a point where you're winning. All right. And so until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.